Bitcoin is setting up for its most explosive move yet. The Trump family's Bitcoin company has just gone public with thousands of Bitcoin. The Federal Reserve is staring down a near certain rate cut. Gold is hitting new all-time highs while the dollar weakens, and legendary investors like Tim Draper are warning that boardrooms across America are scrambling not to get left behind. Put those signals together, and you don't just have another bull run forming. You have the structure for Bitcoin to go parabolic. In this video, we'll break down the latest data on institutional adoption and the macro backdrop that's pointing toward a vertical move. But before we dive in, a quick reminder, only a small percentage of you watching right now are subscribed. If you're finding value in these deep dives, hit that subscribe button. It's free, it helps the channel grow, and you can always change your mind later. When a family with one of the loudest megaphones in American politics and business decides to plant their flag in Bitcoin, it isn't just another company listing, it's a turning point. American Bitcoin, ticker ABTC, launched publicly on the NASDAQ and immediately drew huge demand. The debut was so strong that trading was halted multiple times in its first hours. That doesn't happen for a small cap sideshow. It happens when Wall Street senses something bigger is forming. American Bitcoin isn't structured like a traditional miner. Instead, it's designed to be a hybrid, part mining company, part treasury accumulator, part balance sheet fortress. By mining Bitcoin below market cost and raising ultra low interest capital to buy more, the company is explicitly promising shareholders one thing: to increase Bitcoin per share over time. That means the longer you hold the equity, the more Bitcoin exposure you own, not less. It's the MicroStrategy model, but industrialized and sped up.
We're really excited about what we're doing. I think we're going to grow this company. We're in it to win this race, Jen. We are absolutely in it to win this race. I think you know that about our family. And I put my heart and soul into this company, as is Asher. And today marks an amazing milestone. And the best is definitely yet to come.
That kind of language isn't just hype for a TV segment. It reflects a new mindset. American Bitcoin isn't dipping its toe in. It's signaling to investors and institutions that this is a long-term structural bet. And because the Trump name guarantees media attention, the ripple effect across corporate America is massive. Just like MicroStrategy in 2020 flipped the script on what a balance sheet could look like, American Bitcoin in 2025 is poised to accelerate the next wave of corporate adoption. No Bitcoin cycle has ever gone parabolic without a liquidity spark. This time, the spark is already lit. Futures markets are pricing in a 97% chance that the Federal Reserve cuts rates in less than 2 weeks. That kind of probability is essentially locked in. The Fed doesn't like to surprise markets. When probabilities are that high, it means the decision is baked. Why does this matter for Bitcoin? Rate cuts change the way capital flows. When borrowing is cheap, cash flees into assets that protect against debasement. In the past, that meant equities and real estate. But now Bitcoin is in the mix, and its fixed supply means it doesn't just rise gently. When liquidity expands, it explodes. We can already see the signs in traditional markets. Gold has ripped to new all-time highs, proving investors are rushing back into hard assets. The US dollar has lost nearly half its value against gold in just 3 years. Historically, whenever gold moves like this, Bitcoin follows with even greater speed and magnitude. Gold is the warning shot. Bitcoin is the warhead. Charts tracking Bitcoin against M2 money supply and gold correlations now project a move to somewhere between $160,000 and $185,000 by year end. And that's the conservative case. That's the path if Bitcoin simply follows its historical relationship with gold and liquidity. The aggressive case is much higher. Rate cuts plus corporate treasuries plus ETFs create feedback loops we've never seen at this scale. For Eric Trump, this isn't just theory. His entry into Bitcoin was triggered by a direct assault from the banking system itself. His family was debanked, accounts were closed, access to capital was suddenly fragile. That's when the penny dropped.
We got into this business because we were canceled by every single bank, and we realized how fragile the financial system was. And all of a sudden, I started realizing the power of digital assets. I started realizing the advantages of digital assets, not just here in the US, but around the world. I really, truly believe that Bitcoin is the greatest store of value. I believe in the years to come, I think you're going to have Bitcoin hit $1 million. I see every single major financial institution, every Fortune 500 company, every major family office, everybody wants Bitcoin.
That's a remarkable statement. A Trump openly saying Bitcoin will hit $1 million and tying it to the collapse of trust in banks. This is the exact narrative that's carried Bitcoin from a white paper in 2009 to $1 trillion asset today. The difference now is who's saying it. Not fringe technologists, not just Bitcoin diehards, but mainstream American elites with political power, media reach, and the resources to build billion-dollar treasuries. And this isn't just talk. Eric Trump has structured American Bitcoin to become one of the top holders in the world. Already, with over 2,000 Bitcoin on its balance sheet at launch, ABTC ranked among the top 25 public company holders on day one. Their stated goal is to climb much higher. Pair that with Eric's million-dollar forecast, and you have a very public signal that the parabolic call is not just possible, it's being pursued. The story of every Bitcoin parabola begins the same way. Supply quietly dries up while demand keeps climbing. That's exactly what's happening right now. Publicly traded companies have officially crossed the 1 million Bitcoin mark on their balance sheets. That's over 5% of the total supply removed from circulation. Not for trading, not for flipping, but locked in corporate treasuries. 10 years ago, that milestone would have sounded absurd. Today, it's reality. And that number doesn't even tell the whole story. Spot ETFs are swallowing thousands of Bitcoin every week and holding it in regulated custodians that don't reintroduce it back to the market. Miners like American Bitcoin are stacking the coins they produce instead of selling them, choosing to strengthen their balance sheets rather than feed exchanges. And millions more Bitcoin are sitting in long-term cold storage with holders who haven't moved their coins in years. Piece by piece, circulating supply is disappearing. Legendary investor Tim Draper summed it up best when he said the institutional FOMO is real. He described banks and boardrooms across America scrambling to figure out Bitcoin custody. Companies that laughed off the idea just 2 years ago are now asking, how fast can we get this on our balance sheet? Draper went further, saying it's becoming irresponsible not to own Bitcoin. Any corporate treasury that refuses to add BTC is effectively bleeding value against the inflationary dollar. Any family that doesn't hold at least 6 months of expenses in Bitcoin risks being at the back of the line when there's a run on the banks. And even governments, he warned, that don't put Bitcoin into their reserves will risk being marginalized by their own overspending. That's a remarkable shift in tone from one of Bitcoin's earliest billionaire backers. Draper isn't just reiterating his famous $250,000 Bitcoin prediction for 2025. He's laying out a framework where companies, families, and even governments face consequences for ignoring Bitcoin. In other words, we've hit the tipping point where not owning Bitcoin is the risky move. And that's what makes the current moment so powerful. With less and less liquid Bitcoin on exchanges, every new wave of demand, whether it's corporations, ETFs, or sovereigns, is forced to compete for scraps. That competition doesn't create slow, steady price discovery. It creates step function moves. It's the dynamic that turns bullish structure into parabolic price action. The single biggest difference this cycle is the gatekeepers. In past runs, investors had to fight their way through clunky exchanges, poor custody options, and skeptical banks. Today, the gates are wide open. Schwab and Fidelity are offering custody directly. BlackRock has normalized Bitcoin ETFs. Even 401k accounts are prompting users to open digital asset wallets.
But when you see Schwab starting to custody Bitcoin, when you see Fidelity, I clicked on a 401k that I had the other day, to check it, and the first thing that came up was a little box, which was, do you want to create a Fidelity digital asset wallet? I said yes, and about 1 second later, a little wallet popped up in the corner of my screen. The point that I'm making with that analogy is, you just put trillions of dollars and potentially hundreds of millions of people, because they're one of the largest, into the digital asset space, right? That's happening with all the banks every single day. A year ago, Jamie Dimon was saying, we're not going to touch cryptocurrency, and now they're probably running at digital assets faster than anyone. You see what BlackRock's doing. You see, as I mentioned, what Schwab's doing. You see what nation states are doing. You see what states in this country are doing. Look what Texas just voted on, right? In their legislature, literally being able to custody Bitcoin on their balance sheets, right? So all of a sudden, you've got all these cracks in the dam that are breaking. The people who get in now are the people who are getting in early. I believe that with all of my soul. And this is a global asset. This is an asset that everybody wants. This is an asset. It's probably the only asset in the world that has limited supply. There's 21 million. There will never be another one, unlike gold, unlike other commodities. And I'm just watching it from afar, as for the first time, the capital markets really have access to it, or getting access to it.
That story matters because it shows how effortless adoption has become. With one click, trillions in retirement capital can pivot into Bitcoin. For decades, Bitcoin was seen as the outsider's asset. Now it's becoming a default option inside the most conservative portfolios in the world. That transition doesn't just add demand, it multiplies it. What makes this parabolic setup unique is that it isn't limited to the US Eric Trump described what he saw when speaking at a Bitcoin conference in Hong Kong.
The utility of Bitcoin is there, but the store of value, it's what people want all around the world. Literally, I was just in Hong Kong. I was speaking at the Bitcoin conference. You couldn't see the end of the room. There's 20,000 people there. In a society where kind of all the cracks haven't quite formed. I mean, Asia wants it. Obviously, there have been certain government controls that are breaking down every single day that allow people to invest in digital assets. But it's all of Asia that wants Bitcoin. It's all of the Middle East that wants Bitcoin. It's all of Central and South America that wants Bitcoin. It's every Fortune 500. It's the wealthiest families. Everybody is sprinting toward owning Bitcoin because, again, it's one of the great stores of value. So I've never been more bullish on anything in my life.
That global demand matters because it ensures this cycle isn't dependent on US retail enthusiasm alone. From Hong Kong to Sao Paulo, from Dubai to New York, Bitcoin is being accumulated as neutral reserve collateral. In a multipolar world where trust in US treasuries is fracturing, Bitcoin becomes the common denominator. And when every region is sprinting in at once, price doesn't just climb, it surges vertically. All of these signals, the Fed cutting, gold surging, the dollar weakening, corporations stacking, and Eric Trump openly calling for $1 million Bitcoin, converge into one outcome, a parabolic move. The key takeaway is this: you can't wait until the parabola is obvious. By then, it's too late. The structure forms quietly, and then the chart explodes. That's why preparation now matters more than prediction later. Whether you're positioning with self-custody, planning when you'll take profits, or deciding how much you'll hold through the storm, the time to set that plan is before the mania phase begins. Because once vertical acceleration starts, the hardest thing in the world is to act rationally. Greed convinces you to hold forever. Fear convinces you to sell too soon. Only preparation keeps you sane when the parabola arrives. Eric Trump put it simply.
So I think cryptocurrency is in its infancy, and I think the trajectory of Bitcoin and of digital assets is going to be parabolic.
The fundamentals are locked. The supply shock is real. The institutions are here. And the family with America's loudest megaphone just made Bitcoin its flagship bet. If you want daily, 5-minute updates on signals like these, the kind of updates that keep you ahead of the parabola, join the Crypto Nutshell. It's free, it's fast, and it gives you clarity without the noise. Check the first link in the description. Anyway, guys, that's all for today. Thanks for watching, and I'll see you in the next one.